Hi guys, I'm Chris,
And I'm Jimmy.
and we are the Two Stocky Guys.
On this channel, we invest $1,000 into the stock market every week and tell you guys how our journey goes. So Chris, this is week 16
Yeah.
of our journey. That basically means 4 months in, right?
Yeah, 4 months in.
Yeah.
Yeah.
So as you guys know, we take turns picking our stocks. Let's compare what I have on my side of the portfolio, and we'll kind of talk about it, and then we'll see how your side is doing, okay? Here are my picks. So Devon Energy, JP Morgan, Bank of America, Charles Schwab, Pfizer, Pioneer Energy. I bought a little bit more of Devon a few weeks ago, and then my most recent pick is Exxon. Lots of financials.
Lots of financials, lots of gas.
Yep.
Yeah.
Lots of energy,
Lots of energy.
and severely lacking in tech.
Yeah. Yeah.
Overall, I invested $8,034 into the stock market, right? So we try to aim for 1,000 every week, but sometimes we go over, sometimes we go under. 8,034 in. Okay, I am up a little bit, right? Obviously not as up as the S&P, where tech is a much bigger component.
Yeah.
So if we just invested in a S&P 500 general fund, we would have.
We'd be doing a little bit better
Yeah.
than we were right now. But if we invested everything in tech, we would be doing way better than the S&P 500. So,
yeah. If we put everything in the QQQ,
we'd be doing good right now.
we would have been rocking. Yeah.
Yeah.
So my strategy so far has been to just pick good companies in sectors that are down and out, right? Like super unpopular sectors, right? But quality players in them. Since we started this, financials have been really down and out. Thought we were going to have a banking crisis, banking scare, all that. Energy is just like dying, right?
Yeah.
Oil and gas prices have just been like falling, and people are like, oh, China's not growing fast enough, and we're entering a global recession, blah, 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 which is odd considering that like, oh, we're entering a global recession, but then AI is going to save us, and we're not going to enter a global recession.
Yeah.
Anyways, so I bought some JP Morgan and Bank of America quality stocks when the banking scares was there, and sort of that's been, I think, saving my side of the portfolio.
Right.
Energy has been painful.
Yeah.
Devon Energy, oh man, it was like, I bought it was like 56 the first time I bought it, $56 per share, and then it's just like has not been doing well.
Yeah.
A few weeks ago, I bought more to dollar cost average in. Hopefully, by the end of the year, things will look up on the energy sector. Devon, Pioneer, and Exxon, again, I think there's just like quality companies in just a sector that's just not been performing well this year. And then I have Pfizer in there, which I think the healthcare and pharmaceuticals have also not been performing this well this year, which is odd because they're defensive, and if you think like a recession's coming, maybe you want to be in there, but now everyone's in tech, so there we go. All right, so let's look at your side of the portfolio. You have ConocoPhillips, AMD, which is
Realty income.
Yep.
Yeah.
Prudential, IBM, T-Mobile, VGR, which is
Vector, another REIT.
And then your last one is Edison, right? Edison International?
Yeah, Edison International.
So your strategy has been?
My strategy has been to pick things from each sector, kind of. So I'm trying to pick the best companies in each sector so that I'm getting a little bit of every piece of the market. And also a lot of the things that I pick are dividend players. So I'm not really focused so much on growth. I think the only growth pick I had really was AMD, which is finally doing good. So the one growth pick I had is actually doing well, so that makes me feel good. But everything else was kind of dividend players, spread across the market, just really solid companies is what I'm looking for. So it's companies that I know are going to do well, and I try not to make big bets on things.
Yeah.
So that's basically been my strategy.
Yeah. Well, I think the way we're doing this portfolio, it's very hard to really bet that big
Yeah.
on things.
Yeah, because we have a certain amount of money that we're investing rather than saying, okay, I'm going to make a big bet here. So I'm betting $1,000 no matter what.
Yeah. Okay, so 8 weeks in, you have invested like almost 8,000, a little less, and let's see how your side is doing. So you were up quite a bit more than I am, up a little bit more, and also spent a little bit less money. So that's great. So your biggest players have been, because you've been looking at quality stocks across sectors. What's saving your portfolio or your biggest gains has been AMD and IBM, who are both in the whole AI frenzy that
pretty much.
we're in right now. Let me see. Your biggest loser is T-Mobile.
Right. Yeah. Right. That was kind of a long-term play. Like that was more like AMD. I'm expecting that one to be a growth stock, and I picked that one a few weeks ago. So I'm just expecting it to kind of gradually go up. Yeah.
I think T-Mobile, the reason it's down right now is that there were some rumors that Amazon was going to provide some cellular service.
Oh, okay.
I think that's sort of been squashed. So I think that your T-Mobile is going to make a bit of a rebound.
Yeah.
So tell us about this Vector Group.
So Vector, I picked that one because one, I wanted to get into consumer staples, and they sell tobacco products, which I don't really support in general. Being in healthcare, people shouldn't be smoking or chewing tobacco or anything like that. But people do. People buy it. I mean, it's the same thing, kind of like Coca-Cola. Everybody knows Coca-Cola is bad for you, but tons of people invest in it. So it's a consumer staple, and it's a solid company. And the interesting thing about it is, I think I accidentally said it was a REIT earlier, because they also invest in real estate.
Right.
So it's a consumer staple and a REIT almost, and has a really nice dividend as well. So I thought that was an interesting stock to get into for one thing, which is why I started to look into it more. Because I was looking at a bunch of the consumer staples, and the best performing ones as far as dividends goes are pretty much all tobacco stocks, actually. And people, I think, in the near future are always going to buy tobacco. People already know that it's bad for you, and people still buy it. And it's a vice. So if people want to buy it, I don't really have a problem with that. I can still say that I don't support it from a personal standpoint. I just thought that it was a really cool buy. And if we go back and look at the performance overall, it's had some pretty solid growth. Like not a big growth stock at all.
It's been going up since 2020. It's been going up for a while.
Yep, it's been going up for a while, and I'm not sure if that's because of the real estate investments that they have. That's just the one thing that sets it apart from the other consumer staples that I was looking at. So I mean, I would maybe think that that's partially why it's been going up. So, but I mean, I'm not 100% sure on that. But the dividend yield I thought was pretty nice on it too. So I thought it was a solid company in consumer staples for me to get into. So that's the reason that I bought it.
This is a super interesting pick.
Yeah.
Yes, tobacco is bad and people shouldn't do that or smoke or vape or whatever, right? But if you're thinking about what happens when the economy crashes, people still stick to their vices. Right? Like the smokers are still going to smoke. They'll cut back on, I don't know, buying pants or something. Right? But the alcohol companies, the beer companies, usually they tend to do really well. And Coca-Cola, like you said, right? Like people are still going to probably buy their Coca-Cola and, I don't know, stop paying their electricity bill. I don't know.
Yeah, hopefully not. I mean, it's kind of like healthcare. It's like recession-proof. People are still going to buy their medication, even if we're in a recession. People are still going to buy cigarettes and tobacco. They might even buy more, actually, if they're stressed out about being in a recession. So I feel like it's a pretty recession-proof thing to get into. And I mean, consumer staples are kind of that way in general.
Because if you think about a lot of the other things that people spend money on, a lot of the stuff can be downgraded. Right? Like instead of buying, I don't know, a fancy table, you buy a cheaper table. There's you can downgrade. But with beer, with alcohol, with Pepsi, with tobacco, there's really not that much of a downgrade that you do, right?
Yeah, you're saving pennies or something. You're not saving a few $100s, you're saving a couple pennies. So, and usually once people find something they like you find someone that likes Coca-Cola, they're not going to buy Pepsi. They'd rather drink water than drink Pepsi. The same thing I've seen with cigarettes. Like if someone has a cigarette that they like, they'll pay a couple extra dollars to get that one rather than one that they don't like. Same thing with alcohol. Same thing with a lot of devices.
And I mean that's kind of also why a lot of tobacco products are so expensive, is because people or governments keep putting tax on it, and people are still paying because that's what they do. Very, 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 very interesting. Very interesting pick. I mean, overall, I think your side has been doing very well, and I think this is sort of this shows the benefit of your strategy.
Yeah, of spreading it out a little bit. So tech's going up, and I don't have everything in tech, but I have two things in tech, and they're kind of bringing everything else up. So I mean, tech might go down, and maybe oil will come back up, and my ConocoPhillips play will go up. Maybe REITs will turn up, and then my O and maybe Vector will turn up.
Yeah.
Maybe T-Mobile will take off. So I'm kind of spread out, a little bit more diversified.
Yeah. I am very not diversified yet. No, I think it's going to be very interesting how our investment strategies are going to play out in the long run.
Yeah.
You know? All right. So this is sort of the overall summary where overall together we are, up, which is good. We're definitely trailing the S&P 500.
Yeah.
For the most part, I would say we've missed the tech trade. We didn't catch it. Any thoughts on that?
I mean, we could say that we missed it, but also we could have put a bunch of money into it and it didn't take off.
Right.
So, there's no guarantee that any of those things are ever going to happen. Like I was looking at buying Google at the same time that I was looking at AMD as well for kind of similar reasons. And Google's up about 20%, I think, from if I had bought it around the time I was looking at it. And I just didn't buy it because I was like, oh, well, not 100% sure about it.
Right,
so, they could have just stagnated. They could have not gone up 20%. AMD, the same thing. They could have not gone up 20%.
Yeah.
So that's why I kind of pick companies that I can analyze and see that I know are going to do well, like I said earlier, rather than just kind of make bets. Because I really don't have like a finger on the pulse of the market, like people that have been doing this for decades and really understand like the minor things, oh, this new policy is coming out, which means that this company is going to benefit from it or something like that. I'm not watching the news every day. Like I'm not that active in the market.
Yeah.
So I'm not that confident in my ability to predict how well a stock is going to do in the short term.
Yeah.
I can look at the company and say, oh yeah, in 5 years it's going to go up. But I can't say it's going to go up next month.
Yeah.
I just don't have faith in myself and my ability to do that.
Yeah. I do follow the news and the financial markets pretty regularly. A lot of it has to do with this project that we're doing.
Right, yeah. I do follow it a lot more now because of this. Yeah.
Right. And you know what? Like, I feel like a lot of the news has made me miss the tech trade because you hear all these things about the economy, you hear about the rates, like recession and all this kind of stuff. And like for AI came along, and yes, even if you believe AI is a real thing, you probably couldn't believe that AI would like save the entire world from a recession and all that kind of stuff, right? Like it's gonna save banks from like collapsing, So I felt like being knowledgeable about it, I felt like that was what kept me away from tech. I have like conflicting feelings about it. One is that it sucks. Like on one hand, it feels like this could have been like the opportunity of like the century or something. You know what I'm saying? This run up with like AI, like you missed it, right? Like how like people and myself included, like we missed like the Tesla run up way back when. You missed like Microsoft. You miss AMD, right? When it was like AMD was like $10 or something, right? Like this really feels like I missed a generational or a decade thing.
Yeah. Well, the positive of that is there's always another one. Like you can keep going back. Like, oh dang, I missed that one. Oh dang, I missed that one. Oh dang, I missed that one. Well, eventually you're gonna hit one.
Right. So I think like yes, I think like this feeling that like I totally missed it is like a big thing. You missed like a big moment. Is there. And then I think maybe like a part of me trying to justify, make myself feel better is that I think the good thing is that like at least now like I have some sort of process. It's not defined or super clear yet. I don't have like tons of experience like professional stock traders or anything, right? Or hedge fund managers. But like, I'm more invested in the news. I try to like keep myself aware and I'm letting that inform my decisions. So I feel like I have more of a process in place now than I did before this. And then also like even if I miss this huge boat, I'm hoping that my process will help me catch smaller boats.
Right. Yeah.
Yeah. And I'm hoping that like in the long term that will be okay.
Right.
You know?
I mean, you're not doing bad.
Right.
I mean, you could have just lost everything.
Right.
So you're not doing bad. Maybe you missed that one boat.
Yeah.
But you're still doing well
Right,
overall. Like, you've still had some pretty solid picks.
And I think like that's also something that is, it's kind of hard for people to think so much about. Is like you always think about the stuff that like you missed out on, but you don't really think about the stuff like, well, if I actually did this and then like the whole world fell apart, I would have lost like everything. You know what I'm saying? So, so I think overall, I think it's good that like, yeah, we underperformed the market, but overall, I don't think it's like bad. Like we haven't lost money.
Yeah.
So again, just like really conflicting feelings, and I think that, I think lots of people out there kind of probably have the same feelings, right?
Yeah.
When they like miss the boat and stuff.
Yeah.
So let's hope there are other boats, and hopefully our strategies will benefit us in the long term.
Yeah.
All right. Okay. All right. I think that wraps up for this episode, guys. Till next time.
Yeah. See you.